This is about so-called gaps in the S&P 500 and then how they're filled and what it means for the economy. Take us through this.
All right, so what we have on the screen is a weekly chart using my favorite charting statistical way to look at it, which is called candlesticks, right? And when you chart with candlesticks, and you can do this by, minute by minute, second by second, tick by tick, daily, weekly, et cetera. So I like to look at weekly for long-term trends, and each candle represents the action of the market within the week, a particular week you're looking at. Well, when we have a gap up or down, gaps sometimes get filled. Traders like to see gaps filled. In other words, so if you go back here to the first week of May, around May 5th, the S&P gapped up a pretty good couple percentage points to start the following week, right? So we were coming out of the tariff tantrum, if you will. And then we had news that, okay, we're going to, pause tariffs. And that next week, the market gapped up a couple percentage points. So the second week, so if you look at the week of May 5th to the week of May 12th, there was a pretty significant gap up.
All right. So the upward trajectory that we see in the candlesticks.
And in other words, you see a gap, the close of one to the open of the other. There's a gap in the chart.
All right.
So every weekly gap up going all the way back to 1981, before half my employees, probably 75% of my employees were even born, maybe 85%. Scary thinking about this. We're getting old.
They keep getting younger and younger.
Every one of those gaps has been filled. In other words, the market comes and fills those gaps. It just has a unique, now again, that's a technical analysis. No guarantee it will happen, of course. But if you don't learn from history, you're not gonna, it is, as you said, it's a pretty good precursor of what's going to happen. So why would that gap be filled? And that gap was down around 5,800 points. The S&P is now cleared 6,200 all-time highs again today as of this recording, right? So that would be a good little drop, right, of almost 500 points on the S&P, 8 or 9%. You'd have to see the market pull back to fill that gap. Is it going to happen? Well, I can't guarantee it will. High probability it does. So another way to look at it is, how overvalued is the market? Well, technically it's telling you it's ripping to all-time highs. So I sent everyone on the team a chart just this morning, just showing you just how big the U.S. stock market has gotten. We've always been basically the largest market in the world, but we used to only be about 15 or 20% bigger than the other markets. We are now larger than the next 12 largest markets, stock markets on the globe.
Wait. Larger than the next
12 combined.
Combined.
We are over $63 trillion in value in U.S. markets.
Almost 64 on this total market cap
The next
chart.
12 are only about 53 trillion combined.
19, 17, 7, 5, 3.5, 3, 1, 1, 1,
so
1.
If that reverts to the mean, right? Again, I just, data's data. If it reverts to the mean, that would mean a 50+% correction in U.S. markets, NASDAQ, S&P, Dow, all of them. Now, people think, oh, that would never happen. Well, it's funny, Chip. I've been doing this a while, as you often want to point out, and I earn these gray hairs. We've had 2 market corrections in my career over 50%. So certainly it tells us, if we don't learn from the past, it's probable it could happen again. So again, I'm not saying that's going to happen. I'm telling you should have caution, especially if you're at the finish line. If you're 6 months from retirement, Chip, should you have all your eggs out in that basket that's at full risk? Certainly you need to grow your assets and have exposure to the equity markets to fight things like inflation, but you need to make sure you have somebody helping you risk manage your portfolio before you go walking into retirement just thinking everything is rosy because the markets are at all-time highs.
Now, that is a great segue to our final story, because I'm the tail end of the boomers, and you're the front end, I think, the front wave of Generation X, right? I'm born in 62. You're born in 68.
So I just want to make sure that
happy birthday, by the way. You just had a birthday.
I did, but I still want to point out that I'm not only even younger than you, I'm in a whole different generation. So I just want to put that on air.
One of my favorite moments, I'm the oldest of my 5 siblings, and when my brothers and I together, and said, so who's the oldest? I dine out on that for weeks. But
hey, if you're looking for more content like this, make sure you check out these videos, and don't forget to like, subscribe, and ring the bell so you'll be notified when we publish more content that will help you retire smart. Thanks for watching.